Hello and welcome to CMS Forex News. I'm market analyst Nick Nassad. Today is Friday, January 30th, 2009. Japan's unemployment rate jumped to 4.4% in December as plunging demand for Japanese exports prompted companies to lay off workers. Household spending fell in December, down 4.6% compared to the same month last year. That figure was worse than expectations and shows the extent that households are cutting back spending in the face of Japan's serious recession. Preliminary data for December's industrial production from Japan showed a monthly decline of 9.6%, which breaks the previous month's record decline of 8.5%. The global slowdown is eroding demand for Japanese products, and weak output is expected for January and February as well. The manufacturing sector, meanwhile, showed another sharp contraction, according to the manufacturing PMI, which fell to 29.6 from 30.8. Risk aversion continued from yesterday's session, which continued to boost the yen against its rivals. The Aussie-yen pair, a barometer of carry trade in the Asian-Pacific region, fell 160 pips today, extending losses started yesterday. Australia released data showing that bank lending decreased for the month of December, which was the first decline in lending since 1992, which also pressured the Aussie. UK data on mortgage lending surprised forecasts on the upside, giving the pound a boost in overnight trading. The number of mortgage approvals increased to 31,000, and the amount of lending secured on dwellings rose by £1.9 billion, which almost tripled expectations. The data gives those watching the UK housing market a small sigh of relief, as it shows some improvement following months of deteriorating figures. In the Eurozone, the preliminary version of consumer prices for January cooled to an annual rate of 1.1%, a bigger fall than expected. In a second release, unemployment increased to 8% in December, the fifth month it has increased. It is now at the highest level in 2 years. The data, along with weaker consumer prices, may put pressure on the ECB, which meets next week, but ECB President Trichet has said that the bank was going to hold this month and likely cut again in March. If today's data speeds up that timetable, remains to be seen. The euro-pound pair took another steep fall today in the pound's favor, hitting support at 0.8840. That's a 670 pip move since the start of the week and completely negates the euro's gains from last week. We now sit at an important level of support, with a break here pointing to more pound gains. The pound-dollar pair also advanced, clearing yesterday's high and advancing to the 1.45 area in New York trading. The pair's rally seemed to have stalled yesterday, but found new strength today and climbed above the 61.8% retracement of the fall we witnessed last week. The U.S. economy shriveled to end 2008, with fourth quarter growth contracting 3.8%. Consumers and businesses cut back on spending, the housing slump continued, exports fell, and prices tumbled amid the deepening recession. The 3.8% contraction is the worst in 26 years and follows a decline of 0.5% in the third quarter. Still, the data came in better than expected, which should help to alleviate some of the more pessimistic outlooks from a fundamental side. A measure of Chicago's business activity soured again in January, falling to its lowest level in 27 years. The Chicago PMI fell to 33.3 from 35.1 in December, which undershot forecasts. Businesses are lowering earning forecasts and are cutting jobs and production in response to the deepening recession. Price pressures did increase on the month, which battles back some of the worries regarding deflation. Consumer sentiment, as measured by the University of Michigan, declined further in its final release for January. The index measured 61.2 as consumers reported job losses, declining work hours, and smaller income gains. The USD GDP data gave risk appetite a slight boost in the 30 minutes following its release, but overall it fed a sense of risk aversion that has been benefiting the US dollar against the euro. The euro, pressured overnight from its weak prices and unemployment data, was down 150 pips in today's session. It's a complete turnaround from the beginning of the week when the euro climbed as high as 1.3330. In Canada, the measure of monthly GDP growth fell 0.7% in November, as all major sectors reduced production. The output declines were led by manufacturing, wholesale trade, construction, and real estate. The US dollar-Canadian dollar pair rose to the 1.2420 area in the wake of the Canadian GDP release, but paired those gains to move back to the 1.2270 area. Today's rise completes a 50% retracement of the fall we saw from last Wednesday to this Wednesday, which amounted to about 700 pips. Since we had a clear bounce down off resistance, it may mean we are entering another leg of a downswing. Key releases next week include manufacturing and services data from the US, interest rate decisions from the Bank of England and the European Central Bank, and the US January non-farm employment data. And that wraps up the Forex news for the week. Thank you for joining us here at cmsfx.com, and we wish you a great weekend.